Okay, welcome to Armanino's quarterly cannabis update. My name is Kim Anselmo, and I'll be helping us today with our webinar logistics. But before we get started, I do want to go through some Zoom webinar tips with you. We do encourage you to ask questions throughout our webinar, but we will be holding those questions till the end. You should see a Q&A box, an icon on your Zoom webinar toolbar where you can click the Q&A and submit your question through that. We do also have a chat feature where you can reach out to one of the panelists personally or to the group as a whole. Just enter your question or your comment there and send that. We will get to it. And if any time during the webinar you do have an issue, go ahead and raise your hand and I will get in touch with you to try to help with that as well. And if you should have any audio speaker issues, there is a button, audio settings, on the lower left side of your toolbar as well. And if you click on audio options, it'll open up a drop-down box where you can go ahead and click the test speaker to play. If you don't hear a tone, go ahead and select a different speaker, and hopefully that will work for you, as well as you can adjust your volumes up and down. So today's webinar does qualify for CPE. So if you're actively responding to all the poll questions and you stay on for the duration of the broadcast, we will send you CPE credits approximately 72 hours after the webinar. If you have any difficulties during the polls or issues responding to the questions, do send an email to elevate@armaninollp.com with your name, the date of the session, along with your poll responses. So with that, I'm going to hand it over to our presenters. We have Mike Gorell, who is our partner in charge for the National Cannabis Practice, Ken Teasdale, our partner for audit, as well as Jeremy Stucharski, our partner of technology, and Patrick Chylinski, our partner for consulting. And also to help us out today will be Kiyoshi Williams-Smith, our supervising tax senior, who is going to be today's moderator. So with that, I'm going to hand it over to our presenters to introduce themselves.
Thank you, Kim. Yeah, I'll go ahead and start with Mike to introduce yourself to start it off with.
Hello, everyone. I'm Mike Gorell. I lead our national cannabis practice for Armanino. We have a very robust practice, and I help companies primarily in the tax area, helping them with 280E issues, certainly dealing with federal and state taxes, but also all of the cultivation taxes, the local taxes, excise taxes that are also involved in this industry across the nation. And I was an author of Thomson Reuters multi-state cannabis taxation treatise that goes through all of the different states and how they tax this industry, whether you're a cultivator, a manufacturer, distributor, or a dispensary.
Thank you, Mike. Next, we'll go over to Jeremy.
And hey, good morning or good afternoon, everyone, depending on which part of the country you're in. Great to be with everyone here today. I'm a partner in our strategy team, focused primarily on technology strategy. So I've been working with cannabis companies for a number of years now, really helping them look at their back office processes and how we're enabling those with leading technology to really allow those companies to focus on what matters most, which is, their forward-looking business initiatives. So excited to be with you guys today and share some thoughts with you. You can hopefully take back in action at your organization.
Thank you, Jeremy. Next, we have Ken.
Yes, thank you, Kiyoshi. Hi, everybody. Great to be with you as well. My name's Ken Teasdale. I'm an audit partner with the firm out of our Woodland Hills office in Southern California. I help lead our cannabis practice along with Mike and Jeremy. I head up the audit division within cannabis, and I'm helping organizations not only potentially get ready for an audit, but also obviously performing audited financial statements amongst all the particular standards, whether it be US GAAP, PCAOB, or if you are about to list or a current listing on one of the Canadian exchanges, we do IFRS-based audits as well. So we'll be talking about that a little bit later today. Thanks.
Thank you, Ken. And lastly, we have Patrick.
Hi, everyone. Patrick Chylinski here. Great to be here presenting today. I'm a partner in our consulting practice. I oversee business valuations as well as forensic accounting. So we'll be talking about some of the key issues around what drives value and how you may be able to increase the value of your company, thinking through potential M&A activity. So great to be here, Patrick Cholinsky.
Thank you, Patrick. And lastly, my name is Kiyoshi Smith. I'm a supervising senior, tax senior in the cannabis industry and the moderator for today's quarterly update. So before we begin and before I ask some questions, I want to go over the agenda really quick. To start off with, we'll identify what to expect in the upcoming months in terms of expansion and any roadblocks that you see for your business. Next, we'll determine solutions to help with scalability and expansion by creating an integrated ecosystem. Then we'll move over to the audit topic and how to prepare your books and records for a more complex audit. And lastly, we'll outline how to get the valuation you deserve to execute your exit strategy. And of course, we'll go in and out of different topics, and we'll be asking a bunch of questions. And before we start with that, we want to start with a polling question to understand the type of audience that we have. So you should have a poll coming up right now. And the question is, tell us about yourself. Which category best describes you? If there's anything in detail you want to add, feel free to add that into the chat as well. So go ahead and begin with that polling question. And we'll give it probably another 15 to 30 seconds, depending on how quickly your mouse is when answering these questions.
Yeah, I'll go ahead and close that poll for you in 3, 2, 1.
All right, and hopefully, as we can see, I have the results. Looks like 40% are breeders and cultivators. Next, second place is cannabis industry service providers, and then trickled in there are some dispensaries, manufacturers, and extractors. So the first questions I'll move to will be related to tax. And so I'm going to ask the first question that's going to throw it over to Mike. What can cannabis organizations expect in the upcoming months in terms of expansion?
Thanks, Kiyoshi. Yeah, there's been quite a bit of change, taking place here in the cannabis industry. Certainly, we're seeing the continuing expansion from west to east as more states legalize cannabis. And most significantly has been in the tri-state area of Connecticut, New York, and New Jersey. Connecticut's governor just yesterday signed a bill to legalize cannabis there in Connecticut. And when you take the tri-state area together as a whole, that is as large of a population amount as California. But the difference is that, in a place like New York City, in a 1 square block area, you may have access to several 100,000 people, or millions of people, whereas in, let's say the largest city in California, Los Angeles, a 1 square block area there would have access to a much smaller group. So you're going to see dispensaries in particular, have per store, sales that are going to be off the charts compared to any other, jurisdiction. So that's going to be a tremendous opportunity. And we're seeing a lot of our clients looking to expand eastward as this industry does. I think it's really important to also note that, this expansion, as important as it is in the northern Atlantic part of the country, Virginia became another state that has legalized cannabis. And that's the first real southern state below the Mason-Dixon line. And that makes a big difference, in how that's going to help, get other southern states to legalize as well. So really, we only have Pennsylvania and Florida as the only two, like East Coast, states, if you will, to legalize it for adult use. And once those two states come into play, which we expect Pennsylvania to come in here in the next quarter or two, certainly, by the end of the year, we expect Pennsylvania to come in. And that's another, large state with a big population that will, many clients are going to want to be in that area as well. Another thing that we're seeing is, I mentioned a little bit about, M&A activity that's taking place. We're seeing a lot of that happening, and that drives the need for accurate books and records. And as you know, Ken will be able to attest to here later, you know, not having those books and records, you know, nailed down is going to affect, you know, your valuation, which Patrick will be able to talk about later on as well. And it really, you know, just shows that this industry is starting to mature. And through this, you know, maturation, you know, you're going to need to have your act together. You know, the days of basically, you know, having a good top line number and saying, okay, my company's now worth 100 times that valuation is pretty much over. You're going to need to establish and make sure that, you know, you can back up the claims that you're making on your projections and other things that you may be submitting to investors or potential buyers. Another thing that I see that is happening is that, you know, some states are now that have already had adult use cannabis are now expanding their licensing to include cannabis lounges, and that's going to really create some competition with, you know, alcoholic beverages and normal bars and that serve alcohol. And so you know, that's going to really expand, you know, the demand for cannabis. And then I think, you know, like other industries, the cannabis industry is having some issues trying to find, you know, enough people to support all of this expansion that they're looking to have. And then finally, I'll touch on this a little bit. You know, we see how the airline industry, the hospitality industry has now starting to recover from this post-COVID, you know, phase that we're going through. But cannabis tourism is going to be another area that's going to expand with that hospitality industry. And you're going to see more and more people traveling to these states where they have cannabis legal. And it's just going to be another, you know, attraction for people to go visit these other states.
Thank you, Mike. And so you already touched on some roadblocks already with such expansion to these things. And I'm actually going to move it on over to Jeremy, because Jeremy, you have that knowledge behind on just our technology and the technology that these businesses use. What types of business systems help these cannabis organizations with this expansion that Mike just talked about?
Yeah, and the expansion, you know, it's interesting, Mike, that you ended with the comment on sort of, you know, cannabis tourism. I was actually reading an article yesterday, and then I promise I'll come back and answer your question, Kiyoshi, about technology here. You know, talking about cannabis tourism and even outside of the U.S., countries like Barbados and others that have really been hit by the pandemic and travel being shut down. They're taking an aggressive look at, hey, how do we sort of get this one of our primary means of revenue coming back in, and looking at, do we legalize cannabis as part of that? So if I can go anywhere in the Caribbean, well, where do I want to go? Well, hey, I may want to go somewhere that's more friendly to cannabis users, et cetera. So not just in the US, but really becoming sort of a global discussion. Portugal, same kind of thing in Europe. So really the same things that states here are tackling and figuring out one by one is now really starting to become even more of a global discussion. And the scalability challenges that Mike talked about, you know, and thinking about, you know, how are we having the right strategy and the right tactics and whatnot to build towards that valuation, all of that is supported, you know, with the underpinnings of technology. So looking at, you know, sort of what companies need to have in place, you know, first and foremost, it's seed to sale. You know, that's going to be the platform that allows you to make sure that you're tracking your products, plants, et cetera, at the appropriate level of detail, so you're maintaining compliance with local jurisdictions, et cetera. But that's really just Basecamp. You know, that's I always joke with companies as we start working with them on strategy. It's, hey, license are number one, and then seed to sales number two, right behind that. You know, but that's only going to be part of the story. You really need to think more holistically at what are the things that we need to run our organization, and think about how do we fold those into a roadmap. And we'll talk about challenges, you know, relative to IT in a bit, I'm sure. But, you know, thinking about as we move from seed to sale, how do we get into something that's more sophisticated? If we're in manufacturing, be thinking more about like an ERP. If you're from there looking at your financial systems as well, how do we get a best in class GL and financial system so our business processes can really work and not be a boat anchor that slows this business down? I've worked with some organizations where they talk about, gosh, we spend so much time because of our complex legal structure that this industry requires that we have. We spend so much time ticking and tiling and reconciling and trying to match receipts, where it feels like all we're doing is back office work. And man, I want those resources. My CEO is having to do this at night, and I want these resources market facing, thinking about how do we go capture market, how do we build our brand, all those things that really we're in business to do. So really taking a critical look at what are your growth plans and what is the technology that is going to be necessary to support that, really is where you need to start as an organization.
Thank you for that. That was good. And yeah, so basically what you're saying is that the CEO and the top leadership of these cannabis companies, they shouldn't have to do these manual entries, right? They shouldn't have to worry about the technology, that this ecosystem that's being created. And so are there any other benefits you can also kind of tap into by having this integrated ecosystem?
Yeah, most definitely. I mean, I think, number one, I bring it back to what I call base camp, it's that compliance aspect, highly regulated industry. It's something where, you've got to be tracking your plants and your products really from soup to nuts. So number one, it's going to let you sleep at night because you've got that traceability that's really required. From there, I think, the second thing is it really gives you scalability. Because as I mentioned, the example of the CEO having to sort of tick and tie receipts, that's not what you want your CEO doing. You got to get the books right, but that's not really where you want them focused. The technology is going to give you scale. Without it, you achieve scale with bodies, and that's not always the most economically feasible proposition. So it's going to give you scale, and last but not least, it's going to give you data. And I can speak till I'm blue in the face about data. And thinking about really how data is transforming not just business, but society as a whole. And if you look at the statistics around the fact we've created more data in the last 2 years than the entire history of man up to that point. Think about all the different devices you've got connected in your home. Now translate that to business. You've got POS connected, you've got loyalty programs, you've got all these different inputs. Well, how do you take that data and maybe not monetize it, but how do you take that data and make it actionable? How does it give you insights to your business? I again come back to the example of the CEO that's ticking and tying all of their books. Well, there's value in that because you're getting to a set of compliant books, that could be relied upon, et cetera. But what would the value be if you can streamline that through some technology and redeploy your CEO looking at data, looking at those insights, determining what is next for your organization? How do we achieve that strategy? How do we further it? That is one of the biggest things that having an integrated technology ecosystem that's well thought out is going to bring to your organization. Is just that ability to take action on the data and have a lot of other downstream processes, taken care of. Mike, maybe I'll throw this one over to you as part of it. One of the things we're always talking about is interplay between your world and mine. Hey, we've got tax, but we've got technology, and one begets the other, and how technology maybe streamlines the work that your team does on a daily basis.
Yeah, I mean, that's really important because, as we have to have technology internally to be able to manage our clients' businesses and help them with their taxes. I mean, it becomes so much easier if we can get information that can get automatically downloaded into tax returns. And we got multiple ways of ticking and tying and making sure that, hey, the POS system says that sales were 100,000, that the metric system says that sales were 100,000, and then that jives with the inventory control system that says 100,000 units were taken out. All these things need to be interconnected, and they need to spit out the same sort of numbers so that I can have confidence when we're doing the tax returns.
Yeah, no, and we need that data, right, Mike? We need the data to fill in these local tax returns or these state tax returns and even the federal tax returns.
Yes. Exactly.
Yeah. Now, I mean, the technology integration, it sounds amazing, right? And in an ideal world, you would want that. However, there's always challenges. And I know you mentioned that earlier. Now, Jeremy, what kind of challenges, what common challenges do these companies face when trying to implement this technology?
Yeah, most definitely. That's a great question, Kiyoshi. In a perfect world, you wave the magic wand, all of your systems appear, they're integrated, they give you beautiful dashboards. no data is brought into question. You pass your audit with flying colors and your tax return spit out the other end. But the reality is that's not really the way that the technology is going to work. I think one of the key constraints in the cannabis industry, unfortunately, is still capital. Still an incredibly cash-based business, and it is still very capital constrained, not having access to debt public markets in the same way. Now in Canada, definitely we're seeing more and more organizations look for liquidity through the Canadian markets. And I know Ken's going to speak to that and has great experience there. But in the absence of that, just purely in the US, definitely a higher cost of capital, and some of these systems can be somewhat capital intensive. While they absolutely have value and have a return, they don't come for free, unfortunately. I think the other piece that's challenging and a common barrier is really how fragmented the market is. Because not everybody's working with cannabis. If you look at some of the large technology players, they've chosen to not work with organizations, or maybe limit the organizations they work with, ones that might be service providers, but not touching the plant, things of that sort. And that fragmented market really has sort of done two things. If we were having this discussion 2 years ago, I would say, well, hey, there's all these big holes that are just challenging to fill. And there's not great solutions out there yet, because ABC company would be great, but they don't work with cannabis. What it's done really over the last 18 months is there's been a lot of companies coming in to fill that void. And so it really is, the challenge is staying abreast of who's playing in the market, who is becoming a leader. So if you think about, from a GL perspective, hey, you've got organizations like Microsoft who have been in the space for a long time, but you've got Sage Intacct, you've got others. They've got a lot of complementary tools and systems that sit around it through other providers that weren't there years ago. And so it's really just being able to be thoughtful of, hey, we know we've got business challenges here, and really, is there a software, is there a piece of technology out there that we think could ultimately be brought to bear that's going to make this a lot easier for us? And again, let us focus on those things that matter most to the organization and to achieving that strategy.
That was great. And before we move over to the kind of the valuations and the audit pieces, Kim, can you launch that second poll question? Perfect. And so the question is, which topic most interested you for this webinar today? So you have 5 choices there. And I do encourage the attendees, if you have any specific questions related to your own business, please feel free to throw those questions in. And we do have, we'll allot some time at the end to make sure we get to those questions. And that'll only help you kind of understand and help your specific business out by asking those questions.
Great. I'll leave the poll open for another few seconds. Closing in 3, 2, 1.
Okay, and so based on the answers, it looks like it's pretty equal, but the top one is the expansion of cannabis industry and how to overcome those roadblocks, which Mike talked about at the start, and I'm sure he'll talk about it more as we continue this on. The next one was building an integrated ecosystem, then preparing for your next audit, and then lastly, getting ready for evaluation. But all of these kind of things are important. And before we move over, and I have a question over to Ken. There was actually a question that came in that Jeremy, I know you wanted to tackle this right away. How do you recommend transitioning from a manual operation to a tech-empowered company? Is it a slow transition that we should do, or is it just boom, everything, a single big push?
Well, step one, of course, is to write Armin, a really big check, and we'll take care of all of it for you. No, I'm kidding. I think what it comes back to, I stole a phrase from a CEO I've worked with recently, and he describes it in his team. He calls it gulp rate. Hey, what's the gulp rate of my team? What can we sort of bite off and digest here? And I love that term because it makes it, in my opinion, very relatable. And so what I would say is you have to take a look inwards and say, hey, what is that gulp rate? And can we take on everything as a big bang? Or is that going to be more challenging based on sort of the skills, knowledge, and experience of our people? Commonly, what I would say is look at how you roll out a technology strategy that's going to span over 6 to 18 months. What are those things that are most critical we need to get done today? And then how do we have subsequent phases, whether it be enabling technology on the same platform, so turning on new modules, or potentially plugging in other third-party solutions that all integrate and then aggregate that data. So It really can be one or the other, but it really comes down to, as any good consultant would say, it's going to vary, and it's going to be very much bespoke to your organization. Great question, though.
Yeah, great question and great answer. Thank you for that, Jeremy. We're going to bring in Ken. Ken, you've been very patient and appreciate it. And don't worry, Patrick, I'll get you in here too. But in related to audits, you know, those things are very important. Can you talk about how to prepare your books and records for an audit?
Absolutely. Obviously, a huge piece of audited financial statements are having accurate and supportable books and records. That you have data that can be supported, that can come under the scrutiny of an audit. And what we do is give an opinion on your financials. Mike made a comment earlier about how the days of just kind of concentrating on revenue and we'll get the rest of the books and records kind of sort of right. Those days are absolutely gone. And the good news, over the last several years, I have personally noticed in my practice a shift of professionalism in cannabis industry books and records. We're starting to get a lot more CPAs in there, MBAs in the organization, within the accounting departments, to help with this heavy lift, because it is not going to be efficient or effective if you have books and records that are just not accurate. And it's very painful for the organization, and it's very expensive. You know, you cannot assume that the auditor's role is to help reconcile your books. That's not our role. Our role is to give an opinion on your financials. And there are a few, I just wanted to talk about a few, call it pain point areas, where I've seen clients struggle or have to spend a fair amount of time in getting those books and records up to speed. And probably first and foremost, it's inventory. Many times, cannabis companies obviously have never been audited before. They're contemplating a transaction, looking to either do a merge with someone else, acquire somebody, and at some point, audited financials are needed. Part of an audit, if you have inventory, which obviously cannabis is heavy in the inventory, you have to have those quantities observed by the accounting firm. Well, you probably didn't think of having an audit right at 12/31/20 or right at 12/31/19, and therefore you don't have a clean break with an observation. So you have to have your auditors come in pretty much as soon as possible, do an inventory observation to kind of stop that clock. So for instance, you're ready to have a 12/31/20 audit. That's what's been asked of you for someone who's looking to acquire your business. And we need 12/31/20 and possibly 12/31/19 financials audited. Well, we've got to come in as soon as possible and observe your inventory. Number one, you got to be organized, right? You got to have a system that is accurate, tracks quantities, moves transfers correctly, and allows us to come in and do some sample selections and literally, come in and count. Obviously, over the last 15 months, our ability to physically observe inventory has been limited. We've been able to do them all, and we've continued to do them. I did numerous ones myself, believe it or not, over Zoom. We set appointments with our client. They're out in the warehouse. We need warehouse personnel's help. Literally, one would hold the camera so I can see, and another warehouse personnel is doing the physical counting for me that I can observe. We were able to really perfect that technique over these last 15 months. The world is starting to open again. We're going to be able to start showing up in person to these warehouses, but until that time, we can do it, and other firms obviously can do it as well. You got to have that inventory observation done. And the reason is you're going to have to then roll back to the reporting periods. So for instance, 12/31/20 audit is requested. We are able to put together an inventory observation as of, say, July 1st. Got the records together, we do an observation. You'll then need to take that 7/1 cutoff and go backwards to 12/31/20 and to 12/31/19 and be able to support inventory quantities and inventory values for both those reporting periods. Can be a real challenge if you don't have the internal resources to be able to put this together, to account for the sales activity, the purchase activity, any write-offs, transfers. All that has to be auditable in between. We audit the activity after observing the period end inventory. So that can be a real process and something you really need to think through and plan for with your auditor. Another big area is sometimes cannabis companies have complicated equity structures. Many times for tax purposes, there are numerous entities that are set up for various reasons and different ownership percentages. Sometimes there's minority interest involved, and that can create some complex accounting issues that many times cannabis companies don't have the internal resources to calculate that correctly, when to consolidate, when to combine. All those elimination entries that are involved with that. Minority interest calculations that are important on the financial statements. So you're really going to have to think that through and walk through the equity structure. You might be simple, might be just an LLC or a C Corp that has a few owners and that's it. That's great. But if you start setting up subsidiaries, it can complicate the equity structures and the reporting requirements and what those might look like. So be on the lookout for that. Low-hanging fruit for quite a while here and into the near future, cash revenue, and a lot of it. Early stage cannabis companies have been susceptible to kind of poor record keeping when it comes to cash only sales. And what we recommend is a really detailed log that should be kept showing all the additions or subtractions from your physical cash, kind of arriving at your final balances really by day based on the transactions that happen. Those also should be supported by sales invoices as revenue comes in, cash revenue, or expense invoices evidencing cash getting pulled out, whether that be for payroll or other items. Many times, cannabis companies aren't really able to deposit cash in a traditional bank. Banks are coming around now, but last several years have been tough. Therefore, there's a large amount of cash sitting in vaults. And it's really imperative that you have good internal controls involving how cash comes in and out, the handling of cash, and like I said, a supportable log that will evidence what has happened with the cash transactions. Another item we see quite often is convertible debt or complex debt structures. Obviously, cannabis companies have been forced to be kind of creative with raising money. Their financing. You haven't had traditional banks be able to lend for the most part. So a lot of times companies are giving equity kickers. They have detachable warrants, convertible debt into whether it's common stock or preferred stock. And this can trigger specialized accounting treatment and really needed analysis. You might have to have a warrant liability, a derivative liability on the books that is not necessarily second nature to some of the internal cannabis accounting departments. So we've found those can be stumbling blocks and you need a little extra help, whether that be an outsourced accountant, another firm. Obviously, as auditors, we will help you along with that, but know that might be an issue.
And Ken, I would want to point out that, some of those issues, have tax consequences as well that should be considered. So you can't look at all this stuff as a vacuum. And I think one of the important things is great communication, between, your tax team, your audit team, certainly even, Jeremy with our IT consulting group, so that we're all on the same page, making sure that we understand, the ramifications of maybe changing one thing can have, various repercussions.
Absolutely. It's a great point. Communication internally and with our clients is paramount into making sure these structures are accounted for properly and then reported correctly on tax returns. Speaking of tax, income tax provisions. If you are a C Corp, you're going to need, and under audit, you will have to do a tax provision, which is an estimate of what your, at the reporting date, what the best guess for what you're going to pay in income tax, as well as possibly a deferred tax asset or liability. Depending on your structure, it can be very complex. And again, the internal resources can be challenging to prepare an actual tax provision. If you're a flow-through entity like an LLC or an S Corp, very different. It's not complex at all and almost immaterial most of the times, since the members or shareholders report their share of income or loss on their personal tax returns. But if you are a C Corp under audit, you will have to prepare a tax provision. And sometimes maybe your tax preparer can help you with that, but we as auditors can't prepare it and then audit our own work. So be prepared for that. And then lastly, just an overarching comment, documentation of your internal controls. We as auditors have to, at a minimum, observe that there's an internal control structure and walk through key controls to make sure they're actually operating as designed. And coming up with narratives, maybe per area, simple memos, cash receipts, how do we deal with it? Who are the people involved? What's the segregation of duties? Where is their authorization and double checks? Document that in a simple memo. Cash receipts, cash disbursements. And when I say cash, it could be obviously physical cash or writing checks from a bank. What is your payroll process? Who approves pay raises, hires, terminations, as well as revenue? How do you record revenue? Those are kind of the big ones that we look for as auditors. Document what you do. That will save a lot of time as to creating the wheel during an audit. That can be challenging.
And I think the other benefit of that, Ken, as well, talking about procedures and sort of documenting what you're doing, if you're looking at your technology road mapping, all of that feeds into streamlining what we do. You know, Mike hit on sort of that, hey, all these pieces are interconnected. You may make a decision for your audit that then has a tax impact. You know, in doing so, it can have a technology impact as well. Anytime that we're going to be looking at implementing a system, whether it be seed to sale, ERP, data warehouse, et cetera, we start with the requirements. What are we trying to achieve? How are you doing things today? How do we need to transform that for future state, et cetera? But it all starts with a baseline of what are you doing? What are we trying to solve for? And so taking the time and the initiative to start with those procedures, start with those process flows, is really going to have a ripple effect that can be very, very positive at helping to bring transparency to those processes. Maybe just the other piece I'll hit on too that I thought was interesting. I remember working with a client early on when I was getting involved with cannabis, talking about cash records and how do we need to make sure these are really, really robust. And they said, look, I want to find someone who's worked in restaurants, and I want to find someone who's worked in banking, and I want them to give me their procedures they've learned from those two professions, because those are clearly very cash oriented. You can take a lot of good foundations from those.
Great answer from all, and thank you. This is a perfect time to go into our next polling question. So Kim, if you can, please launch that poll number 3. Which cannabis challenge is impacting your business today? And so there's 4 answers there. And so we'll let you answer that. And then after this, we'll move into our valuation expert and kind of talk about how to get the valuation you deserve to execute your exit strategy. And so Kim will most likely give probably another couple of seconds and close it.
Let a few more people get their responses in and we'll close it up. And give you a 3, 2, 1. I'm gonna go ahead and close it.
All right, and then results are limited banking opportunities, which is perfect because someone actually had just asked a question related to that. So we'll get to that question in a little bit. And so that was the main one. Limited banking opportunities is what people answered. The next one, there's a tie between quality of human resources and branding and marketing. And the last one was interstate trade. Again, all of those are challenges that I'm sure all of you face, but the main one was limited banking opportunities. So let's move over. Let's bring in Patrick. He's been anxiously waiting to kind of give some insights about your exit strategy, even though that's kind of down the line maybe for some cannabis companies. Outline how to get the valuation you deserve to execute this exit strategy.
Yeah, thanks, Kiyoshi. So, we do your classic business valuations, right? What is the company worth? And we do the typical valuation approaches. But a question that may come up before that is, how do I increase the value of my company? You may not be contemplating any M&A activity now, but someone may come knocking on your door and make an offer or start the conversation around an acquisition. And then you likely have an exit strategy or are contemplating that. So at some point in time, you may want to see what your company's worth. And obviously increasing that value is really important. So there's a lot to cover on the valuation front. We'll cover some of those key points today. And what I'll also mention is that what Mike and Ken and Jeremy have already talked about, really this is all connected, it's all related. So when we talk about valuations and financials and performance and financial reporting and systems, this is all interrelated, it's all connected. So we're going to touch on some of the items that Ken and Mike and Jeremy have already talked about. But let's move on to some of the key drivers. So ultimately, the value of a company is really what the buyer and seller negotiate it to be. But went from a valuation perspective, ultimately it's about financial performance. So we look at that from a historical perspective, what the company has done in the past, and also what that time frame is. So a company that's been in existence and operating for a year or two may be looked at a bit differently than a company that's been operating and in existence for 4 or 5 or 6 years. So a longer track record oftentimes gives the buyer or the potential buyer a better idea of what the company has done. So looking at that track record can be important. Obviously, we look at what the company's doing today. So we look at historical performance and we look at current year, current period performance. And that's on the revenue side, obviously. And I think Mike touched on this, but we're looking at a maturing market. We're looking at a market that's changing, maturing, better access to capital in some respects. And so we're moving to some extent from a revenue focus to a profitability focus. Ultimately, buyers are looking for the most part to buy benefit streams, profit streams going forward. So the next item, of course, is the future. So the forecast for the future. So we talked about historical performance, current period performance, but from a valuation perspective, we really focus and potential buyers will focus on what the company can do in the future. And so forecasting, looking at revenue, but also profitability, very important. And we'll touch on some of the aspects about the financial reporting and that future forecasting and how important systems are. And in one way I look at it, just to simplify it a bit, is ultimately buyers are looking at what is the present value of future cash flows and what are the riskiness of those cash flows. And if I were to summarize valuation succinctly, that's essentially it. So we want to make sure that when we're looking at historical performance and future performance, we're also considering the riskiness of those cash flows. So back to the historical performance, a longer period of past performance, profitable performance is likely going to result in a forecast for future growth, future profitability that a potential buyer is going to look for. And so that ties directly into systems and reporting and books and records. And, Ken has talked about the importance and the growing presence of audits in the cannabis industry. So audits are important from a potential acquisition perspective, meaning there's more reliability there. An outside independent third party has come in and opined on your financial statements. And so the more we see audited financials, that's going to give potential buyers more confidence in those numbers. And those numbers are generated from financial systems, and Jeremy has talked about those. So a buyer that's coming in and we sort of use the cliche shoebox of receipts and reporting. The industry is maturing to much more sophisticated systems. Financial reporting is becoming better, and that's really important to buyers because that gives them more confidence in the financials that are being reported. It gives them more confidence in the forecast that you may provide to them. And so they look at the financials as more reliable, and that's going to be important to a buyer because they want to know what they're getting. They want to know that it's accurate and complete. And so the other issue there is if a potential buyer knocks on your door and starts the due diligence process and asks you to provide them information, it can be very difficult, time consuming, costly if you don't have your house in order, if you don't have a good system, if it's not easy to obtain historical data, if you don't have a forecast or a model. So just thinking down the road, whether you're in M&A talks now or contemplating them in the near term or even down the road, think through that aspect is that it's going to be very time consuming laborious, costly if you don't have a good system in place to provide that information to the potential buyer when they're going through the due diligence process. And then a few other key items that I just wanted to leave you with today is timing. So, you know, companies are in different states of growth, different states of maturity, and you're also likely in different states of M&A activity. So you may not even be considering that at this point. You're in growth mode, or you may be in talks already. But think about timing from the perspective of hiring and expansion and capital projects and CapEx and new product launches and those sorts of things. You want to consider if you're looking to put your company up for sale, or if you're in discussions now, or that may be way down the road, several years down the road. But it's important to consider what you're doing today and how that may impact your value, you know, in the near term, in the midterm, in the long term. So you may think about those things that I mentioned. What hiring are you doing now? How's that going to impact your cost structure? Are you looking to expand into other geographies, or maybe open up more facilities? And what's that going to cost? How's that going to impact your financials and your near term and midterm growth? And also consider macroeconomic factors. So what's the economy overall doing? Obviously, we're coming out of the COVID the last 14, 15 months, and that really had a big impact on the economy. But think about the economy overall, the financial markets overall, the industry overall. Obviously, potential buyers are looking at company-specific items, but they're also looking at that in the context of the industry and the U.S. economy and the global economy as well. And another one or two key items I want to leave as thoughts are management team. That's really important. You know, we when we're looking at valuations and considering company-specific risks, and I talked earlier about future cash flows and discounting those back to a present value based on the riskiness of those cash flows. So the things that we consider when we're looking at that riskiness is the management team and how experienced they are in the industry, how experienced they are in terms of getting a company through the M&A process. Other things we look at from a company-specific perspective would be suppliers, customer concentration, key competitors, the quality of the facilities that you may have, contracts, the duration of those contracts. And again, if you think about, I often think of things on a continuum. So if we're moving things over to a more positive basis when it comes to the ability to provide data, if we have a longer track record, if we have a very experienced management team, if we've considered some things that are going to impact the value of the business in the near term, midterm, and long term, and how those levers we may want to move one direction or the other. Those are all things to keep in mind, because again, you may not be thinking through a potential sale or acquisition at this point, but it may come sooner than you expect, and it may come down the road as you're considering your exit strategy. And whether that's a strategic buyer or a financial buyer, long story short, it's going to help you run your business better. And running your business better and more profitably is going to help increase the value of your business. So, Kiyoshi, those are a couple key items. And like I said, there's a lot more to the valuation equation and perspective, but I think those are really the key ones I wanted to hit on today.
That was great. And man, you're last, but you weren't least. That's for sure. And so before we get into these questions, actually, let's launch that last polling question. Let's get that one out of the way, and then we can get to these specific questions. So thank you for those that have asked those questions. Kim, if you can launch that poll number 4. There we go. And so question number 4 is, what is next for your cannabis organization? This is multiple choice, so feel free. I believe you can answer multiple different ones. After hearing about all of this, yeah, what is your decision after learning and getting some knowledge from our experts? And I just want to say thank you to everyone to adding your insights and giving this quarterly update for our audience.
And I'll leave the poll open for just a couple more seconds. And we'll go ahead and close it in 3, 2, 1.
Okay, so it looks like, we have a tie. Expansion, the plan to grow, no pun intended, review internal processes and technology. And then the other answers, we had a couple that answered getting ready for the next audit and the exit planning for our business. And so let's get into the Q&A portion here. I know we had a question regarding banking, and the question specifically was, what percentage of your clients do you feel are transparently banked today? And I guess just overall, maybe just add some insights into how banking is going in the cannabis industry. So anyone can tackle that if they want.
I can take that one.
Yeah.
Certainly banking has expanded quite a bit over the past couple of years. And, the question of banking has never been, if you could bank, it's really at what cost. There's always been, bank and bank facilitators, I might call them, that act as intermediaries maybe between the banks and the cannabis company. And you can get banking. It's just always been very, costly. At one point, they were charging a percentage of your deposit, like a 2% fee for making a deposit in a bank, and so it was available, but at those rates, it becomes, not really something that many companies would be willing to pay. Now those fees have come down significantly, and now you can get banking, for $2,000 a month. So it's much better. There are some entities that, and some of our clients even, that will say, okay, I'll bank, enough through the banking system to pay my employees, pay my taxes, and pay those extra fees for those services. But like profits and things like that, I may hold back and keep that in cash to avoid some of those fees. So, I don't think there's anyone out there that is completely devoid of banking services. It's just a matter of, are they putting all of their funds into the banking system and paying those fees, or are they holding some of it back?
Yeah, I mean, I'll speak real quick. Essentially, every one of my audit clients in the cannabis space has banking solutions. And to Mike's point, it depends on what institution's going to do it and for how much. They've generally set up subsidiary companies to do a lot of the cash transactions. I don't want to say to hide their cannabis activities, but not make it as prevalent. So they found workarounds there. There are some primarily internet-based financial institutions that function like a bank. Credit unions are starting to come on board. So the days of paying, having to go to the IRS office to pay your payroll taxes with a duffel bag of cash, which happened, I think are finally kind of over. The most drastic instance I had with a client in Maui would have to fly one of their management team with literally a backpack full of cash to deposit into a Colorado bank. That needed to stop. That was a little bit dangerous. So thankfully, there's some other solutions involved now.
Yeah, no, thank goodness for that. Oh, just hopefully they didn't check that backpack either. And going over to Patrick, what are current clients focused on when it comes to valuations and getting value for their company? Or in other words, how is the market placing value on brands versus retail versus cultivation and wholesale?
Well, it's a good question. And I think a typical consultant response would be, it really depends. So we look at, when we're doing a valuation or talking to a client about the value of their business and what levers may push that value higher, or what levers tend to push those values lower. Again, it's the overall financial markets, it's the economy, it's and then getting into those company specific factors. And so, we want to make sure that when we talk to clients, we're very realistic, and we're doing valuations with objectivity and up to the professional standards. And so, we do we look at the historical performance, we talk to management about their forecasts, and then from a risk perspective, that's where we're looking at those items that I mentioned before: management team, access to capital, supplier concentration, customer concentration. We look at competitors, we look at transactions in public markets, we look at private transactions as well. And so there are a lot of factors that go into doing the value. But again, when we talk to clients, we talk about how reliable are your financials, how good is your financial reporting. We look at the forecast and how realistic is that? What assumptions have you baked into your forecast? Are your margins increasing? Are you looking at launching new products, opening new stores, any consolidation? You may be looking to acquire a company, and that's going to increase your ability to supply your customers or reach new customers. So there's so many different things that go into play, but keep in mind too, depending on whether it's a strategic buyer or a financial buyer, they may have different focuses. They may focus on something, maybe they're looking at expanding into a new geography or getting access to growing operations, versus a financial buyer that may be looking at a 3 or 5 year exit. So lots of different things come into play. We've touched on these, and I think my takeaway from this would be to think through your business strategy, your systems, whether or not you're currently audited, and if that's appropriate to look at in the near term or midterm. And ultimately, it comes down to how well is your company performing on a financial basis, and what does that look like in the future?
Thank you, Patrick. And it sounds like if cash is king, then data must be queen. That's what it sounds like from my perspective. It sounds like we got a couple minutes left. There's one more question, and someone asked how the mergers and acquisitions market is today. Do you see it getting better or worse in the next year? And that can also kind of tie into just macroeconomics overall and all the factors that are occurring here. So anyone can take that question on how the M&A market is today in terms of expanding.
Yeah, I could maybe jump in there, and then Patrick, I know you work clearly in M&A every day, so in 2020, definitely was down. In one report I think I was reading yesterday, it was 67% down year over year, but it certainly is picking back up. I think, as we hit on earlier, there's more and more sort of sophistication coming into the industry, with more sophisticated operators and more sophisticated investors. And so I think looking at where those opportunities are and being ready both from buy side and the sell side is critical. So Patrick, I don't know what you're seeing in your day to day as well, if it mirrors that.
Yeah, it does. I'll just say that in 2020, things obviously were slow. Things have picked up across industries, and cannabis is I would say just quite busy. I mean, in terms of, just from on an anecdotal basis, the number of phone calls we get from potential clients on valuation issues, it's nonstop. So just from our own personal experience, it's quite active. I don't see it getting slowing down at all. And Mike, you may have some perspective on the M&A market as well from your interactions with clients.
Yeah, and what I'm seeing is that the smaller entities that are not as well capitalized, that are not very efficient, are seeing this as an opportunity to maybe capitalize on their brand that may be well recognized. And as we were talking earlier about how these entities want to expand eastward, these MSOs are looking to maybe pick up some of these brands and bring those brands to the east with their affiliated companies. And so I think that we're going to see a tremendous amount of M&A activity taking place, just because the small guy at the end of the day is starting to get squeezed out a little bit, and the bigger MSOs are starting to take advantage of that and gobbling up the smaller entities.
Perfect, and thank you. And right on time. If any of you have any other questions, maybe take a screenshot of this or take a picture. But you can also find all of these experts on LinkedIn or on the Armanino website. I just want to thank all of our experts again: Mike, Ken, Patrick, and Jeremy. Great job. And thank you to Kim doing all the technology in the back. Please feel free to reach out to us. As you can see, a lot of experts, a lot of knowledge to give out. So thank you all again. And everyone have a good rest of your day.
Thanks, everybody. Thanks, Kiyoshi.
Take care.